So the Korean stock market, the KOSP, was absolutely on fire. And then, well, it just stopped. It hit a pause. Today, we're going to dig in and figure out exactly what happened. It's kind of like a market mystery, and we're going to piece together all the clues. Right, this is the big question, isn't it? After so many good days, so much positive momentum, why did everything suddenly grind to a halt? Now, it wasn't a huge crash, not by a long shot. It was more like a hesitation. And understanding these little pauses is absolutely crucial if you want to get a feel for the market's real mood. And here's the number that tells the whole story, minus 0.27%. I know, it's tiny, right? But this isn't about a big drop. Think of it more like a wobble. It's like the entire market just tapped the brakes at the same time. And that little signal of caution really makes you wonder, what was everyone so nervous about? Okay, so our first major clue actually comes from all the way across the globe. It's a perfect example of just how connected everything is these days. Let's talk about what's being called the Tesla downgrade ripple. Yep, that's right. The whole story of the KOSPI hitting pause really starts with one of the most watched companies on the planet, Tesla. Just one piece of news about them sent this shockwave across the world, and those ripples washed right up on the shores of the Korean market. So what was this big news? It was something called a stock downgrade. So what is that? Well, it's pretty simple, actually. It's just when a financial analyst lowers their official reading on a company. They're basically saying, hey, you know what? We're just a little less optimistic about this company's future than we used to be. Now, that's just an opinion, not a fact, but it's an expert opinion that can really shake investor confidence. And this is the perfect way to think about it. Imagine a huge company like Tesla is a giant cargo ship sailing on the ocean. When some bad news makes that ship suddenly change course, it creates massive waves. And because Tesla is such a giant in the tech and electric vehicle world, those waves don't just rock its own boat, they make all the other investors nervous about the entire industry. And that includes some of the biggest tech and battery companies listed right on the KOSPI. But, the Tesla news wasn't the only thing going on. Not at all. There was another, arguably much bigger, shadow looming over the market. And that was all about the anxiety ahead of a big announcement from the U.S. Federal Reserve. Seriously, you could almost feel it in the air. It was like the entire market was holding its breath. Nobody wanted to make any big, risky moves because everyone, and I mean everyone, was waiting for this really important announcement to come out of the United States. And the group making that announcement? It's these guys, the FOMC. That's the committee inside the U.S. Central Bank that makes the huge calls on things like interest rates. And believe me, when the FOMC is about to speak, the entire global financial world goes silent to listen. Why? Because their decisions impact everything, from how much your loans cost to the value of stocks, all the way from New York to Seoul. So these jitters everyone was feeling, what were they actually about? Well, it all boiled down to a few really important questions. Are U.S. interest rates going to go up again, or will they stay put? What does the Fed think is going to happen with the economy? And the big one, how is American policy going to affect all of us here in the global markets? It was this cloud of uncertainty, of all these unanswered questions, that really made investors want to hit pause. Okay, so we've talked about the why, right? The ripple effect from Tesla and all this nervousness about the Fed. But now, let's actually see what that cautious, uncertain mood looks like on a stock chart. Remember that little number, minus 0.27%? It might not sound like much, but when you see it on a chart, it tells a really powerful story about a market putting on the brakes. Come on, let's take a look. And there it is. So this is the KSP Composite Index. See all that upward movement? Those green bars, or candles, show the market was climbing. It had great momentum. And then, you see it, right there at the very end. That one single small red candle. That's our pause. That's what the hesitation and the caution of an entire market looks like in a picture. Now, check this out, because this is really interesting. On the left, you've got the main KSPI index we were just looking at. But on the right, that's the futures index. That's where investors are basically betting the market will go next. See how they're almost a perfect mirror image of each other? That identical pause tells us that this cautious feeling wasn't just about today. It was actually shaping how investors felt about the future, too. So, we've connected the dots. We see how news from overseas can put the brakes on the Korean market. But what's the bottom line here? What does this all really mean for you? Let's break down the key takeaways. Okay, here's what you really need to remember from all this. First takeaway: no market is an island. A single piece of news about one big US company can send ripples all the way here to Seoul. Second, feelings matter a lot. The sentiment of the market, that collective feeling of uncertainty, can be just as powerful as any hard data. And finally, remember this: a pause isn't a panic. It's often just the market taking a smart, rational breath, waiting for things to become a little clearer before it makes its next big move. And all of this leaves us with the one big question looking forward. Was this one-day wobble just a little hiccup, a temporary pause before the market starts climbing again? Or could it be an early warning sign of more caution, more volatility just around the corner? That right there is what everyone is going to be watching for next.